Basically, to explain the strategy that we're now using is a trend following strategy. You see the market has been going up for quite some time and then it changed. How do you confirm the change? We have this swing around this area here. What is a swing? When you have a clear defined green candle and a red candle and there's these 2 weeks and then there's a second red candle, so it means the market is swinging there. So what you want to do is to watch it go across the line here, Bollinger Band, and bounce off this bottom Bollinger Band. Now once it bounces off, here's obviously the first green candle, the second green candle, the first red candle that appears to the downside. Immediately you enter going down, but this normally you do it for over a 15-minute time frame. So the expiry here is 1:30. Yeah, already basis I'm getting into the time frame, but the key is the first red here immediately might go to val where pants. So by the time we get to 1:30, as you can see this trade is in motion, it will be in profit. Now let's watch the whole process and see. So again, to explain, trend yakho ikhuphukile all the way up, it hit a peak, swing la yaba a red, a green candle, then a red candle. Then after this red candle, to confirm the swing was the second one. So to confirm even further was to drop into this zone to show its sentiment in negative. The market is moving to the downside. So when it bounces off the first green, second green, this red that appears, siyaphansi. Now to get a better entry, because we've said which is over below here, it obviously makes sense to have a better position, but you don't want to be risking too much, on one trade. Let's say maybe our trade we had intended to take $4,000 going down, and then we first took it here on 2,000 as we've done here, and now there's a better position up here, and then we decide to go 2,000 down again over the 15-minute time frame, hoping it will go down sharp. So now let's see what it will do in action. So but basically this is a basic trend following strategy. So the trend has changed direction and then we're jumping in with the trend going down over 15 minutes. So I'm gonna pause this video and then we'll play it towards the end, or maybe let me let it run for the whole time being, and see the action. So yeah, either or, when you have a strategy you must stick to one thing. Don't chop and change your strategy. Stick to one thing, do it over and over and over. 99% of the time the strategy is when you use it, the market will go out of the money for a majority of the time, but it will then close in the money, because what happens is that the low, it can't be this low that is here must be broken, this low that is here, because the market, it came back in, bounced down, bounces up, it must come and break this way. So it's way out of the money right now, but test the validity of the strategy and see what happens. But this is the strategy that we're using and that we're going with. Don't have a name for it, but basically change of trend, negative sentiment, we wait for the push for the red and let it come down. So so normally you'd use the strategy in conjunction with the TDI on MetaTrader to confirm your entry. When you're on MetaTrader, you'll notice that the action is not the same, but it's more accurate on MetaTrader, whereby you have the market dropping and you have this push. You'll find with MetaTrader maybe this push is not as strong, and then maybe this push over here at the top is the one where we're supposed to come in. But let's leave it at that. I'll explain it with MetaTrader. It's a weekend, so So MetaTrader is not working, the market is not active. So we're trading over the counter, as you can see, OTC. It's a lower volume, and basically you're trading with the few participants in the market. So there's 4 minutes left. Let's watch what happens. It's a bit boring to watch, but it is what it is. It's paying 91%. We've in $4,000. What's $4,000 at this point? Even though it's a demo at this moment in time, it's good to use to practice. So we're in risk to $4,000. That's 58k, and we're looking at a return of 91%. So it's probably about 50k odd that we're gonna be looking at. So the one trade is in the money. Now both of them are in the money. Look what it's doing. It's gonna break this low over here. It's gonna break this low over here. It must close this side. So always look at 15 minutes. So you measure the 15 minutes. Any point in time during that 15 minutes, when it gives you that drop, the pullback, you enter immediately at that one. If it gives you a better position, you enter at the higher position and let it run. So again, ideally I would say this is where I'm still like debating it, which okay, if my intention is to go in 4,000, I don't go in 4,000 at the bottom here, but I go in 2. I wait for a better position, I go in at the other 2. Sometimes it might not go up this much, it might just continue to drop from there, so you might miss out on that. But the key is not the how much you're gonna make, but the how you're doing it, and the how you're doing it is the same. So if I were to draw this thing, if I were to draw this thing, let's see if it will happen. What we want basically is for the change in trend going down, like this one here, going down, going down, yeah, and then we want it to bounce back up. Unfortunately, it's PT there. When the red candle comes, we strike going down. So generally we're only gonna take trades going down with this baby over strategy, and basically it will end off on the other side over 15 minutes. We're in the money, sure. So IFRS, so we keep to the same thing over and over. We emela opportunity as well. I wish I could remove these lines. Let me see if I can remove these lines. I can't remove the lines for now, but let's just undo what I've done here and then repeat what I'm trying to say is ukuthi we have the market pushing up, ne? And then after it pushed up, it gave us this swing over here. Okay, let me just undo that one. It gave us a swing over here. So this swing over here, we see it's a swing indication that the trend is changing, but we're not gonna guess that the trend is changing. We let it change. How do we let it change? We wanna change. It break it to this side down. So it went down. Yeah, it's a negative sentiment. Negative sentiment means it lay below this line, which means it's no longer positive, it's negative. Yeah, well, it's negative from this zone here. So when it's negative, the problem now is that I need to try and zoom in back into those things. They're not appearing, but what we looked at was that it bounced back up. After it bounced back up, we then waited for the red candle to appear, whereby it went down. Immediately after that candle closes, we entered the market right there, going down. It went all the way up. As it went up, because it's more at this point here, because we entered at this point here. This is a rough first time video, but it explains pretty much. We were lucky to enter the market now and find it doing what we're doing. So we're here right now, and it will obviously end off in our favor. This is a perfect example of what we want to do. This is what we're gonna do for the rest of our lives, forever and ever. Amen. Because this is the strategy that works, where you have what we call pushing up the trend there. The trade closes off in profit, and then exactly profit. And look at it now. Let me close this thing here. Boom. Let's close this trade. Yeah, the trade your corner 81. That's 3.6. My machine just froze. Okay, so my machine just froze. Okay, so 3,651. So 3,651. 3,651. It's not about how much. It's 53,000 that you would have made over the trade. Imagine taking that 53,000 and that's that. So look at it. Again, the market pushile all the way up. It turned at that point at the top, it went down. Then my year down, my shall in tambole, yati green. Leli libuvu malivela, maliqeda ukuvala uyaphansi, immediately uyaphansi. But wenza sure ukuthi une space se-15 minutes, and then if ube ne-lucky yakhuphuka yeza futhi phezulu uyaphansi still, because originally your aim is ukungena la. And then ivalile after 15 minutes siyibonile siphe i-profit. After that uqedile, awuzama ukungena futhi la uyobheka something else somewhere else ekuphe exactly this thing, whereby ikhuphukile up like this, down like that, bounces off of there, gives you the whatever. Sometimes ingafika la elibovu livele la, then ungaya phansi. Fine, again, because the principle is afana ngokuthi iyenzeni. Okay, let's not break or bring anything else. You've entered one trade, you've made money, you out. The more money you put in, the more profit you make. Whereas for the day, you need to get to a point where utate one trade, two trades, maximum 4 trades, and then we are puma good items. So that's the video, that's the strategy.